Hey guys, Mike here. So, oh boy, what a flat day in the market. Let me tell you. I mean, the SPY and the Qs, the total range from the high and low was 0.5%. Now, that just lets you know and screams that the market's like, we're just waiting on CPI data. That's all we're waiting on. I mean, that was crazy how little movement you got in this market where you'll see, 1 to 3% swings for crying out loud, right? And so that was amazing. But I do want to show you something. This kind of hopefully proves what I've been saying to you, right? And the kind of market we're in, this is going to be jam-packed video. I'm not going to spend as much time on the charts because we have CPI come out tomorrow, and that's going to just move the market one way or the other. If it comes in really bad, really good, if it comes in the middle, maybe not. But I want you to show you something. This morning I looked at this and I was like, let me just look at this. And I want you to look at all the green, right? This is a mix. I have every sector in here, right? Green, 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 green. You sprinkle in a little red. But you go through this, you're like, and some of this green is like 6 to 12%, especially if it's a crypto stock. It was just off the charts, right? And you keep going through here and you're like, okay, Chinese stocks are okay, blah, blah, blah. And then you think, man, it must be a really green market for crying out loud. It must be great. And then all of a sudden you get to the big boys. AMD red, right? NVIDIA red. All right, Amazon, Meta. Hey, you got Netflix up 0.5%, right? Google's red. Tesla slightly green. Microsoft goes down big because something happened there. Apple. And then look at the market. The SPY's flat, and then the Qs are 0.5%. It stays that way almost the entire day. Qs end up going down 0.68%. But I mean, I don't understand because like there's so many green stocks on here, and this is a lot of stocks. But no, and the reason is simple, guys, because this math keeps changing. But remember, the S&P right here, those stocks I showed you that you got to track, those 10 stocks, right? And you go down to AMD and I believe it's Meta right here, if I'm not mistaken, or Netflix, excuse me. Now, you go there and look at that, and it's because on the S&P, 26% just from those 10 stocks out of 500. The Qs is even worse. 55% is what those stocks make up on the Qs. 55%, just that handful of stocks, right? And this makes sense, this chart right here, when it shows profitable tech versus non-profitable, which is the big boys, right? And you can see, what's been trending down? Non-profitable. What's been trending up? Profitable. Because in this kind of economy, that's where people shifted. You saw it was going up. Then they shifted the profits out and ran it into Apple and Microsoft and all those stocks, right? Now, pay close attention to this right here because this is going to show you what's been performing year to date and then month to month. I want you to look at the change here. Year to date, consumer services, obviously IT, tech, consumer discretionary killed it. All of a sudden, they switch to month to date, and tech goes down 2.5%, 2.5% for consumer discretionary. What starts doing good, though? Utilities, energy, healthcare. What does that tell you? Remember, we talked about people just selling out of oil stocks, right? Where are they rotating into? They're up a lot in tech. Like big money takes profits and rotates. What they do is start rotating into more safe stuff, healthcare, utilities. Of course, energy just seems to never want to give up, right? And when we go over to here, S&P 500 performance today, what do you see? You see tech is the biggest loser of the day. And then we go over to see what's doing the best. You got materials, energy as usual. Financials made a comeback. Remember, some of these those stocks have just been wrecked, right? And what does big money and love do? Rotate into wreck stocks that they help wreck, by the way, because they shorted it all the way down. All right, healthcare is positive, industrial, utilities positive. And then we go over here and you'll see some, if you remember what I showed you last time, percentage of sector index members above 200-day moving average. Tech still up there, 74%, 75% for consumer services, 71% for the NASDAQ. And look what's making a huge comeback. 66% healthcare, 66% utilities. These were in the dumps. Last time I updated you just a week ago, right? And then you got energy up 61%. Big recovery since oil started popping. What's still lagging? REITs, no shock there. And financials are starting to try to make a comeback, but still at 37%.
The most valuable commodity I know of is information.
And if you get anything out of this, guys, please hit that like and subscribe button. I really appreciate it. And if you're new, think about subscribing. If you like this content, I really appreciate your support. And so pay attention to those charts. That lets you know where big money's moving. That's what moves the market. And by the way, when I say big money, it's your money too, by the way. It's the money you put in pensions and your 401ks and your IRAs, all that good stuff that Wall Street's managing for you, okay? So just FYI if they're managing it for you. So just to put that out there. So yes, it is your money. They're just using it and stuff. And so and you can see, I mean, huge comeback for utilities and healthcare, right? And what are those? Those usually were safe havens. That's where they rotate if they think something bad is going to happen, because if something bad happens, tech usually going to get hit the worst, right? And so you got to pay attention to that kind of stuff. Financials, I expect to see them move up. I think we all did, because again, some of those stocks, especially the regional banks, have just been decimated, right? I mean, down huge, all right? And so they love to short them down and run them back up, right? That's what they did with Meta. That's what they did with Netflix, right? Prime examples, and a whole lot of non-profitable stocks. Now, when you look at this right here, very short time spent on the charts because of what's happening tomorrow. But it's funny, look where they left us. Look at the S&P. Right up against that descending trend line, right? Major resistance. And then if it does, we do get bad news tomorrow, that volume gap right there, it can move down pretty dang fast, even though there is 2 high demand zones right beneath it. But watch out for that. But again, a lot of resistance up above, puts us dead center, by the way, in between the weekly expected move around 401 to 412 on the SPY, which is just funny to me. And they did the same thing to the Qs. The Qs has done nothing in the last 4 trading sessions, left us dead in the middle of the weekly options expected range right there, as you can see. And so again, if this comes in, like I say, we're super red hot because we're expecting a big drop. Yeah, you could see, especially a big drop in the Qs, because the Qs have been selling off a little bit over the last couple of days, but not much, right? And then we go to Tesla. And Tesla I'll talk about for a second. Where's it at? Sitting right there at that freaking descending trend line again, okay? Right in between the weekly expected move, but it needs to regain this POC right here. This volume node right there is around 195. That's what the bulls need to regain. If it regains that, I'll guarantee you the gap right above gets filled, and then we start heading back up. You see that volume gap right above that? No doubt it's going to fill that gap most likely. But again, this all depends on the data tomorrow. Meta has done nothing. In the last, was it 5 trading sessions? Look what they're doing. They're just keeping us right there. What was that, the 212, 213 area, whatever it is? And so you look at that right there. If everything goes good, we're marching, we're filling the gap. Again, we're 16.2% away from the gap. If everything goes tragically, then maybe it finally gets a sell-off. Now tomorrow, huge amount of information, all about the mortgages in the morning, but nobody cares about that, because here it is. Check out core inflation. They expect it to stay the same or actually tick up. But regular inflation, they're expecting like a 0.8% drop, which is the biggest drop we're expecting. And then in the afternoon, we get FOMC minutes. And if everything goes according to plan for the bulls, it's going to be mooning. We're going to be rocking it up. There's probably no doubt about that. And then, of course, if it goes bad, people are going to be holding on going, oh my goodness, and the bears are going to be extremely happy. Now, there's always a firm that puts this out. It's usually JP Morgan or somebody else. Today it was Goldman, about what they think is going to happen with the numbers. In the comments, put where you think the headline CPI is going to be. They're expecting, was it 5.2? And then core CPI, they're expecting between 5.5 and 5.6. Put what you think. And then what do you think is going to happen? Here is what Goldman's expecting. And so here's Goldman's right here. So they say CPI is below 4.6. The S&P 500 moons. It goes 2% or more, which would be a huge move for S&P, right? The Qs would go 4 to 5% easy. The CPI is 4.6 to 5.1. SPI moves up by 0.5% to 1%. Makes sense. If CPI is 5.2 to 6, then it moves down about 1 to 2%. And then, which makes no sense to me, but then if CPI is above 6%, then S&P 500 moves down by 2% plus. And I'm assuming they're talking about headline right there and not core, just by the looks of that. Could be talking about core. But yeah, I mean, the bottom line is I don't think they have to hit the projection tomorrow. If it comes in, because they're expecting a huge drop. I was shocked when I saw the drop, and I'm thinking, well, if prior was 6, and you're looking at, you'll say it comes in at 5.4, that means it went down by 0.6. Didn't hit the projection, but it still came down. But don't you love what they're doing with core now? Remember, core is a sticky one. That's the one the Fed actually likes to look at the most for a reason, because it's going to be the hardest one to get down, supposedly. So, but you know what I do. Come on, guys, in the comments. If we come out with some shocking drop, and it comes out to 4.6 to 5, say, somewhere in there, and that's a huge drop. You know what the market's going to do, even though it has a lot of resistance above it. There's no doubt. I mean, the market, because you can feel the market, it wants to move higher, right? It wants to move higher. April is usually green, especially before earnings gets here, right? And so it wants to move higher. And again, if it happens, I'm not saying it's going to happen. I don't know what the data is going to be. If you got a projection, let me know in the bottom. But, if that happens, you got to understand what I said yesterday. A lot of people are shorting right now. All right. That means that the reason why I say it can move fast and you get those big numbers, because shorts are going to get torched, right? They're going to have to start covering fast. And so that's why we get all these fast moving rallies coming out of October, coming in was it February we started moving up again. You know, these rocket up moves because the big boys love to move it up, and then they love to short it, thinking it's coming back down. And when that move didn't happen and it moves up, boom, right? And so, and a lot of the big guys are actually the hedge fund and everything. They're almost like a lot of them are actually neutral. You still have a lot of people shorting, but they've kind of wanted to be neutral because they're not sure. They're like, maybe CPI is coming down pretty good. Maybe it will, maybe it won't. So they want to at least somewhat be able to enjoy the rally, but also not get caught off guard if we start heading down lower, right? Because again, the projection, you know, people are thinking earnings aren't going to be good. Yeah, growth is slow and they shouldn't be good. Right? But again, the bar has been set so low, all they got to do is trip over it. It's not like the bar set high. See, that's what was happening last year. They were missing double misses and everything because the analysts weren't bringing them down. Now the analysts have brought them way down in a lot of areas. So you go, oh, okay then. And the stocks, the smaller stocks have been beaten down. These bigger stocks, though, now they keep going up and up and up. You would think the bar would be a little bit higher for them. But remember, they're cash cows, right? So they don't need to go out and borrow a bunch of money. The interest rate actually works out pretty good for them because they draw interest on their money. And so they're pretty good. That's why those stocks are sitting there at 56% of the Qs, 26% of the S&P 500, right? They're almost treating like value stocks, and that's why. So, you know, tomorrow it should be crazy with all the data coming out, and the FOMC minutes should give us an idea of what they're saying going ahead. And you're starting to see some Fed talk now, where one guy came out today, one Fed president, he was like, yeah, we definitely need to like really take a step back on these rate hikes and really look at the data more, right? And another one was saying, well, maybe one more hike. So remember, what's the market love? The pause. So looking for the pause, right? And then they're still saying, the bond market's still saying, you are cutting in July. You know, again, I ask people, I'm like, how can y'all say earnings are going to be good, you know, and then also having rate cuts, right? But then another Fed president said today is, if inflation, and watch this one, if inflation is coming down at a good rate, we need to cut interest rates. That's what he said. And I was like, oh boy. And I figured the market would pump on that, but it didn't move. Didn't move at all. So that was kind of weird, right? Because normally the market pumps on that kind of news, but it didn't. And so again, you can tell, especially that move, no movement today in the market. It's just like, nope, we're just sitting here waiting it up, just waiting it out and see what comes out. So before the market opens, we're going to know where we're heading. That's just the way it is. So again, hit me up in the comments. Let me know what you think is going on tomorrow. Hit the like and subscribe button if you got anything out of it. And I'll be here to report it all. We'll see what happens, guys. Have a good one.